guys, this is Joette with BalloonCoach.com, and I'm so excited to have Joe and Elizabeth with us today. They're going to share their screen and show you this wonderful presentation tonight on a topic that so many of my members and my followers have asked about, which is what do you do to track your money so that you can have financial success and be ready for tax time and all of that. So you guys can go ahead and share your screen so that you're ready to do your presentation. And that will be wonderful. All right. Hey guys. Okay. So I do see your screen. And then what we're going to do, guys, is Joe and Elizabeth are going to go through their presentation. They'll have a time where they'll let you ask questions, and then definitely at the end, open it up for the chat. So if you want to put it in the chat while you think of the question, you can go ahead and write it there and let us know what your questions are, but then know that they'll answer them at the end. So Elizabeth and Joe were introduced to me by Linda Perry. She is a balloon decorator and entertainer in Northern Florida. She is a member of our Balloon Boss Mastermind program. She is an alumni of our live events in Orlando, Balloon Boss Summit. And she met Joe actually through a networking event. And so I really was glad that she introduced us, because this is an area that so many people ask for questions on. And so by being able to have our financial pros give you some outlines, some guidelines of things to be ready for the end of this year, start of 2021, it allows you to start on the right foot and be able to, don't feel overwhelmed that you have to do everything at once, right? Make one step forward at a time. And this gives you kind of that framework of things that you should be following. So with that, I'm going to let you guys take it away, and I will mute myself.
Right. Getting a little bit of reverb. Sorry, 1 second. Okay. All right. So, hi, everybody. I'm Joe Fiore, and I'm a partner in Fiore Tax Services. And we believe in giving you back your most valuable resource.
Joe, I'm not hearing you very well right now. I was hearing you really good earlier, but now I'm not.
Okay.
And yeah, we've had somebody else say that you're too quiet currently.
All right. How about now?
One more time.
Hello.
Much better.
All right.
We've got somebody saying they can barely hear you.
Move this microphone. Can we hear now?
Yes, that's much better.
Okay, let's give this a try. So, as I was saying, you're gonna turn that down.
Yeah. Okay.
So, as I mentioned, we are in the business of offering tax services, bookkeeping, and payroll so that clients can spend time working on their business and doing the things that will actually bring them money instead of counting it. And on the other screen over here, we have Elizabeth Fiore. She's my wonderful partner in life and business, and she's been keeping me in line for the past 10 years, and I'm grateful to have her. As Joe mentioned, we got connected through Linda Perry, and we're so excited that she brought us into the fold of your awesome balloon community. The systems and skills that you guys are building and learning about are very impressive. So we wanted to add to that and give you a few things to think about as you're planning for 2021 so that you can get off to the new year on the right foot. We're also huge nerds, so there might be some puns along the way, so be ready. And also, as she mentioned, we'll have a couple breaks for questions, so feel free to add them to the chat as you think of them, and we'll also have time at the end.
think I fixed the reverb issue. Are you guys still, can you hear me okay?
You are a little bit quieter than Joe is. You want to try again?
Okay. How about now?
There you go.
Okay. We will get this yet. Okay.
So let's keep it popping. Get it? There's the pun. All right. So the first tip we have is to set your business goals. You may be thinking, how does this relate to my money? Well, your business goals will guide the rest of your financial strategy. You've heard the phrase garbage in, garbage out. That's essentially what happens with your financials when you're unsure of your business goals. Before you make your goals, run your financial reports. The profit and loss statement or income statement describes and summarizes all the revenue, costs, and expenses a business accumulates during a given period. In this case, the past year. The balance sheet is a snapshot of your current state of business assets, liabilities, and how much is owed to investors. And your cash flow statement summarizes the cash and its equivalents entering and leaving a business. It shows how well a business manages its available funds. These three reports will help you analyze your business and make better decisions for next year to help you achieve your goals. Your business goals can be anything, but I highly recommend that you set measurable goals and that they're connected with making more money, because that's what most businesses want to do. For example, in looking at your reports, you realize that corporate events are your biggest profit margin. This year, we booked 30 corporate events, and they're a big moneymaker. So next year, we're aiming for 52, or about 4 per month. So this is a clear goal of making more money more efficiently by analyzing your profit margins. This is a good goal that you can set. And so why set these types of goals? Well, now that you've broken it down into bite-sized chunks, you can decide how to spend your marketing dollars, how much staff you need, and any equipment that may be worth investing in. All those decisions have financial implications, and they should all be planned and accounted for. So our second tip is not to mix and mingle your finances. Start fresh in January with completely separate finances. If you don't already have one, get a business and a savings checking account, or a business checking and savings account. And then only use them for business purposes. Again, louder. Only for business purposes. Why does this matter? For one, your finances will be more simple and easier for you to organize. And second, having personal expenses mixed with your business expenses can trigger an audit. Nobody wants to go through an audit. So what are some legitimate business expenses? You have a list here. Each has specific requirements, but this is just some general things. Office supplies, travel expenses, legal fees, utilities, and so on. Here's the key though. You want your business finances to be separate from your personal finances. If you ever get audited, they will want to have everything orderly, documented to be able to provide backup to your expenses. So if you have random grocery trips mixed in with your business expenses, it'll make the whole process more arduous and painful, and can also lead to mistakes and accidentally deducting a personal expense as a business expense. Say you have a work and a personal vehicle. Can you imagine paying for gas with the same card all the time throughout a month and then trying to figure out which one's which? It's gonna be a huge headache. So our third tip is to maintain daily records. How do you stay on top of it? Keep your daily records. I know it might feel like the last thing you want to do in the course of, running your business, but it's vitally important. Just please do it. It doesn't have to be fancy. Just make sure you track everything. If you don't have accounting software, you can scan your receipts with your note function in your phone and write the date of the expense and a brief description. If you have QuickBooks Online, you can use the app to take a photo. You can even connect it to Google Drive or even email like digital receipts to your software, and it goes in nice and neatly. It's great. So quick timeout. Time for a quick plug. If you don't have QuickBooks Online software, we can get you a discounted subscription. We specialize in training. We can do setups for you and also take over your bookkeeping so you have more time for your business. All right, game back on. So if you don't maintain your daily records, this will be a pain when you're trying to reconcile your monthly finances and you have 10 of the same charges. You might think you'll be able to remember everything, but the likelihood is that you'll be missing out on important deductions if you're not taking the time every day to do this. All you need is 15 minutes every day, collect your receipts, write down what it was for, and if it was for a specific client. For business owners, it's super important to track mileage. You need to track mileage, the date, the reason for the trip, for example, picking up supplies or delivery. You can also utilize the mileage tracker in QuickBooks Online on the app to make it super easy and handy. And at the end of the year, all these miles can add up significantly. So imagine this scenario. You work for someone, say it's me. You work for me and I expect you to use your car for my business, to use your phone for my business, and your home office for my business. You would demand that I compensate you for those things, right? It's the same for tracking your mileage and phone expenses, etc. You need to be compensated by your business at the end of the year. And that's why we track all these things. So we can stop here for a couple questions if anyone has any.
Let's look to see what we have.
So guys, any questions, feel free to ask currently. I know just that little tip of being able to use the app. I think sometimes people forget that apps work or like all the features that are in an app because you start using it for one thing and you don't realize you can do other things with it. So I love that you were saying that they can do both the mileage and the receipts through the app.
Yeah. And it's super handy because then you don't have to keep the receipt. You can just take the photo and now you have it. You don't have it cluttering up. You don't have the shoebox full of receipts. It's just there in the app. The other thing that's really neat is that it actually connects to Google Drive. So it will save it in Google Drive and you have your copy of it in case, you know, technology happens and you can't find it in the app for some reason. It's there in Google Drive for you.
So we've got a couple of questions that came up. Can you guys read those? You want me to read them out?
If you want to read them out, that'd be great.
Sure. Okay. So one question is, does QuickBooks sync with Square?
It does. There's some apps to get it to sync perfectly. And I know Square also has an app. It really depends on what it is that you're looking to get out of it. So yes, the short answer is yes.
Okay, great. And then Karen said she started using the mileage app last year and she loves it. Stephanie is asking, what do you suggest for expenses that my husband pays but is in a business expense, such as family plan, cell phone account, or car insurance?
Yeah, so those are a little tricky. What I would recommend is that you find a way to have the business pay for it. Even if that means that you transfer funds to an account or you pay for that portion of the bill with a checking account, for, you know, that goes to the bigger plan so that at the end of the year, you know exactly what it was. And if you pay for it in kind of those two separate ways of like a little bit from this account and a little bit from this account, then there will also not be any sort of speculation as to what that money was for. You know, like you will have the receipt that it was for your cell phone bill or car insurance.
What if we use our personal car for our business? How do we track that via the app?
That's a great question. So when you use the mileage tracker in QBO, you actually can use the GPS function and track the actual trip, which is really handy. Or you can look it up if you forgot to turn it on. You can look it up and you just track it. So you don't just set it and forget it and it tracks everything. You have to do it by trip. And the reason for that is you want to make sure that when you're tracking it, that you're including what the business purpose was of that trip. And it can be like picking up supplies or delivery for XYZ client. You just want to make sure that you include that reason when you're writing down all this information.
Awesome. Ted is asking, do you need to produce paper receipts if you are audited?
No. So that is another great question. When you scan your receipts and have them in a digital format, that digital format now becomes the master copy. And you no longer need the physical copy. However, it's always good to keep at least for 6 months to a year, or to back up the digital copy so that your computer crashes, you have a backup. We have one of those external hard drives, so in case something happens to our computers, we have it there. But no, it's not necessary to keep it after that.
Excellent. So I've got another question. Sarah said, last year I tracked all of my mileage, but I was still under the standard deduction according to my accountant. So I stopped tracking. Is that a thing or was she mistaken?
I wonder if it wasn't that you were under, Joe can jump in here, the standard, that you weren't able to itemize because you were below that, the standard deduction there. So, and I don't know what your situation is, but usually once you have a significant amount of business expenses, you will itemize. And this should also be considered a business expense that you are either paying yourself back or counting it as an expense. So that's another way to operate this. You can track that mileage, and at the end of the month, you pay yourself for that mileage tracked, or you just deduct it straight from the business.
Cool. A question is, they want to know if they had heard that QuickBooks Self-Employed is an app, but not something that they can use on desktop, because there is 2 different versions too. I think that's important for people to know the difference, correct?
Right. So there's QuickBooks Desktop. There's also QuickBooks Online, and then there's QuickBooks Self-Employed. So there's 3 technically. We do not recommend self-employed. It's better than nothing, yes, but it's not going to give you what you need at the end of the year. It's not going to be able to let you categorize things. It's not going to give you the, extensive reporting. So it's almost not worth it. Like, you just go straight for QuickBooks Online. The expense is just a little bit more, that it's totally worth it. And with QuickBooks Online, you get it where you can access it from your computer and through the app.
And I know one of the things why Party People Events likes QuickBooks Online is Jonathan is very much about being a balloon boss and having people work for him. So the office manager who lives an hour and a half from our office is able to go in and invoice people through QuickBooks.
Right.
And so is he, and that multiple people can get into that and function with it versus it just being at the office on a desktop.
That's huge, especially given the current environment. Like, that has been a game changer for people that were using desktop before.
So Karen is asking, she uses QuickBook Pro. Is QuickBooks Online a better choice? And then she also has the QuickBooks POS system.
So we just sort of covered this, but it's the desktop version has its benefits. It's definitely a good system. You're just not going to have some of the functionality that you have with online, where you can access it from any computer, where you have the app, where it connects to some of these other systems that you might be using. So it is absolutely, if it's working for you, that's great. If you want to have the accessibility, that's a whole different conversation.
Can the QuickBooks Online match up with the POS system? Or do you know that?
With the QuickBooks POS system? I'll have to check into that one. We specialize only in online. And most of the time our folks don't have like a physical POS system. They have the card swipe that is QuickBooks, or they use like Square or Stripe. So I'll have to check on that one.
Okay, thanks. And then do you have any suggestions on why Square Sync would double post? Looks like my revenue is double. I think it's posting my invoice as revenue.
Yes. So Square is one of those that tends to get a little bit glitchy if it's not installed properly. So sometimes it has to do with the mapping. It's another good reason to go and check your monthly statements so that you can make sure. But the best way to do it is getting kind of these connector apps that ensure that when it comes in exactly how it should, and it's not double counting anything. So yes, there is a way to fix it. If you will message either of us, you can message the advisor one. We will let you know what that connector app is. I just don't know it off the top of my head.
Thanks, Elizabeth.
Yeah.
And then Martha has a great question. She says, if you currently have desktop and you switch to online, can you retain all the data that you have?
Yes, you can. We just recently did this for a very, very large nonprofit. It's a bear, but you can absolutely retain all the information. The good news is if you don't need it for reporting, if some people are like, I don't care about last year, it was a dumpster fire, like forget it. You can just move forward January 1 with online and just save your reports and save all the stuff that's in desktop, and you don't have to go through that.
Well, I know with her, she has a business that's pretty well established because she also has a candy shop and delivery business, and it's an actual storefront.
Yeah, that would make sense for keeping a lot of that then.
Yeah.
Mm-hmm.
So cool. And then the question is it the same if you move from self-employed and switch up to the online version? Can you transfer that?
Yep. You have to essentially start a new subscription. You don't lose all of that because you can save the reports and the information, but they don't really talk to each other.
Cool.
Yeah, they're trying this thing now where it's in beta where it'll transition a little bit more smoothly. But we haven't seen it yet for our clients.
Well, cool. Well, I know we're on tip 3 and we've got several more to go.
Yeah.
So thanks for letting us take a break, because as you can see, my people have some questions. So
and we're about to get into like really intense stuff. So feel free to, keep the chat flowing.
all right. So cool. All right. So let's keep on moving on.
All right. So like I said, we're going to go over COGS. This topic alone can really take up like a whole hour. So just know if you don't really get it just in this little bit, it's because it's a lot of information. So I'm going to try to go over like the top important things, but we're here for you. If you have more questions, just let us know. But the main thing you want to know is that COGS is a line item in your tax return, and it affects your taxable income and your gross profit numbers. This is sometimes called cost of sales or cost of goods to manufacture. So if you hear those terms, that's what that means. It's all referring to the same thing. It just varies based on industry. COGS is actually really important because, like you guys, since you make products, you actually need to see the cost of what it costs you to make it in your income statement in some way. If it's not in COGS, it actually will not show up in your income statement, which is your profit and loss statement or your P&L. And inventory is only in your balance sheet because it's an asset to your business. So when you sell goods, you're not moving it from inventory into the product that was sold. unless it's in COGS. So it's a really critical aspect of managing your inventory and understanding what it is that you have on hand. So what's actually included in COGS, according to the IRS, it's the direct cost related to the products that you're selling. So this can be raw materials. This is including the freight of having it shipped to you, the storage of these products, or any parts that you use in production. Actually, direct labor costs are included. And this is just for employees. It doesn't include your time as an owner or as a solopreneur. But if you subcontract out labor or you have W-2 employees and they're actively involved in the production of these goods, then their labor actually is a part of that cost. Also, if you have factory overhead or warehouse costs that are related specifically to production. So it doesn't include your indirect costs, which is like your general overhead for the entire thing or something not related to production or storage. It also doesn't include advertising, cost of managers, administrative employees. It doesn't include any of those things. Okay. So you also can't double dip. So if you put it in COGS, you can't deduct it as a regular business expense. But there's benefits to it being a COGS item in that it actually lowers your taxable income. So what is COGS and what is inventory? Inventory is the merchandise that you purchase with the purpose of being sold to customers. So this is the cost of the merchandise when you purchase it, not necessarily when you sell it. Inventory, like I said, is an actual asset to your balance sheet. And let's say if you were selling your business tomorrow, that would actually be something that you would account for that would go to the person that is purchasing your business. So it's actually a good thing within reason. However, it's something that needs to be managed really closely because too much inventory can mean that you have cash flow problems, or it's an additional expense in insurance or storage or any losses. And too little inventory can mean that you're not necessarily meeting the needs of your clients and you're missing out on sales. So the cost of goods sold is then the cost of the merchandise that is being sold to the customers. The cost of goods sold is reported on the income statement when the sales revenues are reported. So essentially, as you make a sale, that cost of goods sold is reported. So where do you even start? How do you even start to kind of put your arms around this? Well, the very first thing that you should do is take inventory of everything that you have as of 12/31 this year. So when the clock strikes midnight for January 1, you know exactly what you have. And this is anything that is more than like, thread or something so difficult to inventory. But this is anything that you keep stock of, that you have merchandise of, any raw materials, any work in progress, any finished products. So if you've created things that are going to sell but have not yet sold, all of those things are considered inventory. Any supplies that you might need. And so then you want to write all of that down item by item. You want to include what your cost to purchase was, when it was purchased, and you want to put all of that in your accounting software or in a spreadsheet. This is going to be your new inventory sheet. And this is a critical part of figuring out how to price your products. So if you don't take this step, you're going to be missing a key component of pricing for profit. So, everybody still with me? So to calculate,
this is where people are like, well, we know we need to know this, but we often get confused. So we're going to keep on listening. We're going to keep on trying to get it all figured out and straight.
That's perfect.
Some
because
people are great.
It'll make sense.
People have difficulties still.
When I get to the next screen, it'll make a lot more sense. So if you'll just hunker down and bear with me. So I see we have some questions and we'll get to those in just a quick second.
Yeah, go ahead and get through this part before you go into those. Yeah.
Yep. So how do you calculate your cost of goods to manufacture, cost of goods sold? Well, you're going to gather the information for each one of the finished products that you make, and you're going to break it down to the raw materials. You're going to break it down to, if something includes 60 balloons and 3 foil balloons and half a spool of ribbon and 5 weights, like that level of detail. And then you're going to include the cost for contracted labor, if there is any, for any other materials or supplies that are related to shipping, storing, labeling, anything that you might use. And then you're actually going to put it in a chart. I put a little sample chart on this so you can see kind of what that might look like. But you're going to come up with a final cost. So for this make-believe product, the final cost of all of the materials is $17.05. So that right there, that's how much you're in for raw materials. The other thing to think about too is, let's say I'm using a half a spool of ribbon, but you obviously can't purchase a half a spool of ribbon. You can only purchase 1 spool of ribbon. So you will need to make those adjustments so that we understand and you understand what the true cost is. And you still have, a half left to use. So you cannot use your labor as the owner in cost of goods manufacture, but we will factor that into the pricing. So don't kind of erase that out of your mind just yet. But you also want to include here any shipping, freight, any overhead for the production process or areas. And the test that I like to think about so that if it is cost of goods to manufacture or not is, if I sold $0 tomorrow, if I sold nothing, would this expense still be here? If the answer is no, then very likely it is related to you selling. If the answer is yes, if you have to pay those expenses no matter what, keep the lights on or pay your receptionist, then it's not a cost of goods to manufacture. It's a business expense, and that's handled separately. Okay? So before we go into the pricing, let's answer some of these questions real quick. All right. So we missed the self-employed one. Can I upgrade easily? Yes, if you did it last week, I think you can you're within the 30 days to just cancel it and get the other subscription. Do we inventory equipment? Yes and no. So you want to know what you have, but it's not considered inventory in the sense that your raw materials are considered inventory. The equipment is considered an asset once it gets to a certain price. If it's like, if the equipment is something that costs $100, then yes, that is something you would consider as part of what you're creating. But if the equipment is something like your computer to design something, or your, I don't know.
Like our inflation equipment runs anywhere from $100 to $1,200 or
Yes.
$1,200 for a piece of inflation equipment.
I would say anything over $1,000 is considered an asset to the business, and you would want to depreciate that accordingly. Anything below that is going to be considered a business expense. But, like if you need a whole stick of glue every time you make something, that's considered inventory.
Do we inventory shelving or things we use in our workspace, like organizational items?
No, so those will be a part of your pricing, and I'll show you that later on. Head explosion, sorry. Those will be a part of your pricing, but they're not a part of your inventory. So that's just kind of like an overhead expense. Okay.
And then Martha is saying, I thought overhead would not be included in the COG.
So only as it relates to production. And I know that it's like such a fine line. But let's say that you have a space that is dedicated to production. That's where you create things. That's where, everything in that space is used for you to create the pieces that you create. Then it is considered it. But if you have your home office, if you have your computer, if you have, the utilities in your home that you're using as a home office, that's not really considered the same thing. So is that distinction?
It's more of that, yeah, that dedicated space. It's only for production.
Exactly.
Cool. I think we're good.
Okay, great. And like I said, I think it'll make a ton more sense once you see this chart.
And you're not dumb. I saw in the comments you're not dumb.
Yeah, this is not a simple thing, because there's a lot of gray areas and it's a lot of things based on individual business. So there really is no such thing as a dumb question. I put the link in the chat, but I'm gonna see if I can do it again, because I don't know if
I can put it in.
okay, great. But we have this pricing formula spreadsheet that we're sharing with you guys. You can literally put in your products, your raw material costs, and all of these other things to help you get to how you should be pricing your items to have a profit. Now, again, we're going to go just like straight through, and hopefully this will all make sense. But the product description, that's how you sell it to your clients. Whatever it is that you call it, that's what I would call it here. Your direct materials, we went over that. That's your cost of goods to manufacture. You see the 1705 is the same as 1705 in the previous screen. And these are completely made up numbers. So do not think that this is what you should be pricing your items. I just was trying to use some semi, round numbers to start. But let's say it takes you, you don't have anybody working for you. It's just you. And it takes you 3 hours to put together this arch. Well, let's say you're paying yourself $15 an hour. And so that's going to be $45 an hour. And in this spreadsheet, a lot of these things will automatically calculate for you once you enter in some of the information. So it's super handy in that way. Then there's those indirect costs, all of the overhead that does not compute into everything else we've already talked about. This is your website expenses, your advertising, your, your computer, your everything else that you have to pay for, or your educational expenses, your professional development, everything that you have to pay for no matter what. But the reality is, every time you sell something, it should be chipping away at those costs. Every time you make a sale, you should be helping yourself cover those things. That's how you build the profit in. That's how you know that every time you sell something, you're making money. If you're not slowly chipping away at those costs, at the end of the month, you're still going to have all of those. And you're only going to have accounted for the materials or the labor. Similarly, if you don't account for your own labor, then you're always going to be eating into your profits to pay for yourself. And you're going to wonder, how did I work so much? How did I make so many things? And yet I still can't eat. I still can't pay myself. So it has to be a part of the equation. It has to be something where you put it in and you figure it out. Okay, I am paying myself this amount of money to make this. My time is valuable and it is worth money. Here is what I'm paying myself. So when you add those together, you come up with a wholesale price. That wholesale price is your break-even point. Because if you haven't taken into account all of those other things, if you were to sell it for that wholesale price, you would literally make zero profit. You would just pay for what it costs to, cost your time and materials, a little bit of overhead, and that's it. Now, the retail markup, that is kind of the science and the art behind pricing. But this is where you determine the value that you add, that you bring to your customer. this is where you decide, well, this is a really complex thing and not everyone can do this. So there is value to that. This is where you decide, well, if I take on this client that wants this thing, I can't take on these other customers. So I have to price it to make it worth it. Now, we generally recommend that this is between a 2 and 5. Usually if you're beyond 5, there's other things that you probably need to take into consideration in your pricing. Not to say it's unreasonable, but you probably just need to do a second look to make sure that everything else is correct. You know, maybe you're not paying yourself enough. Maybe your overhead costs are not where they should be. But then that is going to give you your retail price. This retail price is what you should sell it for. Now, you're going to see funky numbers in here. I'm not recommending that you sell it for $91.87. You should, you know, bump it up to 95 or 100 or whatever the case may be. But it's also going to compute this profit margin in dollars and in percent. And it's going to tell you essentially if you're in the ballpark, if you are where you should be in order to check all of these boxes and meet all of these needs that are very real for your business, and then also have profit at the end of the day. So I'm guessing this is going to be a big one. So we will take questions as well now.
Right. And one of the things is we've talked about this in previous webinars, but some of our members are new and some people, you know, this is an area that always people struggle in because in our industry, a lot of times pricing is based on kind of like what other people are doing. So we just go with that. Right. And then if the client will pay more, we price it more. Like, so honestly, it's one of those dark games a lot of times where it's like, let's see what can go. Right. So when people have been working on this and trying to break things down, it's something that, you know, there are those extra details. And one of the questions was, when calculating the cost of goods sale, are you only putting the exact items that you used? Or an example is when a client orders puppy dog print balloons, they come in a bag of 100, but that actual design may only need 5, but there was no other reason that person would have ordered a bag of puppy dog print balloons because they probably will never sell them to anyone else. So that's right. One of those things where people have always tried to figure out like, okay, so do I go ahead and just charge for the whole bag or do I have to do it just for the specific amount of what was used?
That's a great question. And I think that's also where it comes in of if it's literally for that customer and for that project only, then it is a cost to that project because you're not going to use these puppy dog paw print for anything else. It's literally just for this. And like we said, you can't buy a half of a bag, you know, you can only buy the one bag. So in those scenarios, and granted, you have to use 1, your best judgment, and 2, I always think about it like, if I were to have to defend this, could I defend it in a reasonable, ethical manner? And that I think is easily, you know, defended in a ethical manner. There's no reason why that would be an issue, I don't think.
Yeah, right. There's no other way to get the balloons, so that essentially becomes the cost of 5 balloons.
Exactly.
You have no other option.
Right. And, you know, for most balloon companies, you know, using standard colors of red, blue, white, whatever, you know, a standard balloon, that's something that can be used and sold to someone else.
Exactly.
But if you're having to buy in a specific color, specific product, it makes a lot of sense.
Yeah.
Another question was, how do we calculate the overhead cost put in the orange box?
Oh, yes.
Oh,
I was going to add a little chart for this one and I forgot. So that's a great question. Thank you. So for the overhead, you want to calculate all of your overhead charges on a monthly basis. So, you know, $500 in your warehouse rental and, you know, your business insurance and your educational, you want to break it down by month. And you want to then divide that by the number of items that you anticipate you will create in that month. And that will essentially give you a per item cost to attribute it to. That's also not to say if you can have different indirect costs per product. So if you find that something is a lot more intensive and you feel requires a lot more overhead and you want to charge that in your pricing, that's totally fine, because this doesn't speak to the other stuff. This is just for you. This is to inform your prices.
And then another question is, which category do we put the owner's salary under?
Yes, so that's going to be in the yellow. So that is your salary essentially for that individual product. If you have subcontractors or people that work for you, then they will be included in the direct materials cost.
So let me just clarify that for a second, because earlier you were saying that the owner's labor didn't go in for making the
Right.
product.
Right. So for direct materials, it's only subcontractors and people that work for you. And that's for, that very specific number that comes in your income statement.
Gotcha.
For this, because it's just for you, you can account for those labor costs however you want. This is where you would put your own cost as the owner. This is where you would say, I want to pay myself $50 an hour. Fine. This is for you.
Just make sure you're able to hit your mark and cover the cost you need.
Yeah, this is not what's going to get you into trouble with the IRS. It's that direct materials cost.
Cool. I think that's the questions.
Okay. Oh, and then calculate monthly overhead, divide by the number of items or events. Up to you. It can be items or events, whichever one makes the most sense. So I would say whichever one is higher, because there's a probability that you might be creating multiple things for an event, or doing one-off things that are not an event at all. So I would say whichever one is higher.
All right.
And yes, that is correct. The $50 an hour goes in B, and then the assistance labor goes in A. Yes, that's exactly it.
Yeah, I was gonna say Tabitha was just typing in what you were saying for people to have the notes.
Oh, okay.
Helpful.
Yes.
Yeah.
Okay.
All right, so that was great, Dory. Just to clarify that the labor for your staff goes in A and the labor for you as the owner goes in B. I like how you clarified that.
Yes, that's perfect. Okay. All right.
Take a deep breath.
So then we also want to budget for profit. And now this is a big disclaimer. We are not profit first professionals. We like the book, and this was actually recommended to us by Linda. And so we just want to share the wealth. We think it's really a really good read for entrepreneurs and kind of how to look at your own business expenses. So we're not going to get into a ton of this because it really is just superficial, and I recommend you guys read the book before any of this. But what I really love is that in his resources, he gives this chart, which is figure 4, and it gives you an idea of, based on revenue, kind of where your targets should be. So how much your operating expenses should be, how much your taxes should be, or how much you should be saving for taxes, how much you should be paying yourself. And that will give you really good targets to aim for so that you are able to be profitable. Now, you will notice that there's 2 different charts. In figure 3, he has top line revenue and materials and subs. Materials and subs is essentially your COGS cost. So then your real revenue is after that. So that's something, to kind of bring it full circle so you guys can see where that would be. We also think this is going to vary depending on your business. So it's okay if you're not quite there, but these are really good things to work towards. And then we feel very strongly that if you don't put rails on your expenses, they're going to balloon up. They're going to balloon up and eat any profits that your business might make. And it's very similar to the same way that if you don't have a personal budget, your personal expenses can get out of control. It works in the same way. If you don't have targets for how to minimize and control your expenses for your business, it's going to eat into your profits. Okay.
Can you hear me okay?
Yes.
Good. I think the audio is working for me now. All right, so we're on to tip number 7 now, and that's a little bit more easy to digest stuff. So it's a little breather here. So it's review your bank statements. You need to make a plan to review your bank statements every single month. Make this part of your monthly routine. Just make time for it. It's very important to know all your numbers, how they're coming and going. Most business checking accounts close at the end of the month. If yours doesn't, you should call your bank and ask them to change it for you. It makes it a lot harder to review monthly statements when you're actually spanning 2 months. It's just more complicated than it needs to be. If yours is not at month end, just ask them to change it. Usually it's pretty easy for them to do it for you. So why should you do this? Why should you be reviewing your bank statements? Well, think of this account, or think of this as counting your register at the end of a shift. If you've ever worked in, a grocery store or a restaurant, some fast food place, you got to account for all the money in there. So why do we want to do this? Well, it's an important aspect to being a business owner. Even if you do have a bookkeeper, you should be doing this to make sure your accounts are healthy. You got to look out for yourself, right? And why do we want to look at it? Because we might find missing transactions that we didn't get posted because we were busy and we forgot about it. You can find duplicate transactions. Sometimes things slip through and you get it in there a second time and you got to get that out of there. You can find transactions posted for the wrong amount. All the time people will fat finger their keyboard and put the wrong numbers in, and this is how we catch it. And it just ensures, accuracy of the data and the reports, which is really what drives your business, is these financial reports. It makes informed decisions for you. And also it prevents fraud. You want to make sure someone's not adding an extra zero to a check you cut them. So that's another great reason to check that. All right, on to tip number 8, everyone's favorite. You got to get busy with your IRS compliance. Everybody's favorite organization, the Internal Revenue Service. So as a business owner and employer, you have certain responsibilities to your employees and to the federal government. Among those responsibilities is staying in compliance of your filings. So how do you accomplish that? Well, first, you need to get W-9s to all the vendors where you spend more than $600 a year. You can run a report in your accounting software and see who those vendors are, and just email it to them and ask them to give it to you no later than January 10th. So next, you got to file all your W-2s and 1099s for the employees and those applicable vendors. You got to file with the IRS by the 31st. That's why you need to get them back by the 10th. And you can file these using your accounting software or payroll software. They usually make it pretty easy to, put that in. And then next, you want to stay up to date with your payroll tax payments. That's another big one. Once an employer withholds payroll taxes, it becomes their responsibility to pay the appropriate tax authorities in accordance with the schedule provided by the IRS when you formed your company. On a federal level, income tax, Medicare, Social Security, and tipped wages are all reported on a quarterly basis using Form 941. Got a bunch of form numbers coming at you now. And for federal unemployment taxes, you report those annually using Form 940. And then on state levels, payroll taxes are reported quarterly using detailed wage reports. And local reporting is set by local tax agencies. So you have all the different requirements through them. And lastly, be sure to pay your quarterly estimated tax payments on your income. I have dates coming up for you next on. So these are some important dates to keep in mind, and go ahead and write them down in your calendar, set reminders, do whatever you have to not miss them. What I recommend is that you put them in your Google or Outlook calendar, and maybe a month out, have a reminder, a week, a few days out, get all these reminders lined up so that you do not forget them. This will make it so you can prepare accordingly, either if you're doing your own books or a bookkeeper might need things from you. You don't want to miss these dates because they will levy some penalties on you, and you don't need to be spending more money than you need to. And this next year is gearing up to be a very crazy tax year for individuals and preparers. Not really looking forward to it. If you're planning to have professional help with your taxes, you will need to have your information clean and ready, and book an early meeting with them to get prepared. And I know many preparers are planning to have it cut off past certain dates because there's so many unpredictable items. All the, pandemic stuff and the PPP, CARES Act, things like that. It's going to be crazy. It's still not all figured out. So it's going to be fun.
Okay, so now that we've sufficiently scared you, you want to make a plan. So the best time to make a plan for the upcoming year is January through March so this January through March that is coming up. You can plan for 2021. And the reality is it's a good time because you're already going to have gathered all of your important tax documents. You're already going to be looking at your finances. They're going to be kind of laid bare for you to analyze. So it's a really good time to start thinking about things that might be coming up in the future. An important part of tax planning is just trying to think ahead in terms of what might come down the road. Obviously, none of us could have predicted a pandemic, so it's hard, but you can make certain predictions, like your business structure. If you are not yet an LLC and you want to become an LLC, or if you're an LLC and you want to be taxed as an S Corp, those are the questions that you need to be asking yourself now so that you can prepare and make those decisions in the right time. There are certain date cutoffs for becoming an S Corp. There's other things to consider. So it's a good time to ask those questions. Is it in my financial benefit to do this at all? Another thing too is that you might want to project income. So sometimes people defer income to the next year. So if you're like right around 12/31 versus January 1st, you might want to defer it, obviously without upsetting your clients or doing anything crazy, but you might want to take those payments on January 1st. The thought process being that you want that income to be in the next year. There's also accelerating some expenses. So maybe you want to take on some of those additional expenses before the clock strikes 12. And so you just want to pay for them in this year, even though they're for upcoming things. There's obviously the opposite approach. You can do literally the exact opposite thing. A lot of businesses are actually accelerating income and deferring expenses because of COVID. So they want to have the cash flow. They want to have that income for this year to try to cover some of the costs that they've incurred. And they're deferring the expenses till next year or till January 1st, when they're hopeful that next year they will make more money to make up for some of those expenses. Another thing is if you plan to purchase a large asset, a big expensive piece of machinery, a new computer, or a car, whatever the case may be, you want to depreciate those over the lifetime of the equipment. So those are things you need to plan for. Make sure that you have everything planned out, make sure you have the money, make sure you have the right accounting system in place. So by thinking ahead for some of these things, you're going to be better able to plan out your tax liabilities, your large expenses. It's going to be so much smoother in the long run. Okay, so That was tip number 10. I added some extra ones because they're very timely, but I'll answer questions before we move on.
Okay, cool. So, and I love that you've got that bonus information because it applies to several people, some that are listening tonight and some that will be watching the replay. So a couple of questions came up is that we had some joking going on, which is talked about all the time, which is I just want to do balloon designs, you know, like,
Yeah.
so many
Yes.
times we're like, I got in the balloon industry to do something fun, not to do paperwork. And then
I know.
talking about you, that's why we hire bookkeepers. So Sharon's asking who is included in the W9, like my balloon suppliers, my helium vendor.
Yes. So
anybody
those
who
are
gives
going to
me a
be, oh, sorry, go ahead.
So yeah, just trying to figure out who it is that she needs to the W9.
Yeah, so that's going to be any person that works for themselves that doesn't have a business structure. So it could be your handyman, whatever. Anybody with an LLC. And the only people or the only vendors that you wouldn't include are corporations. So if they're an S Corp or a C Corp, you wouldn't include them. Honestly, the best way is like, unless you can tell right off the bat if it's like Lowe's or Home Depot or whatever, those are obviously corporations, but run those reports, see what's on there, and then email them with the W-9 and say, hey, I think that this falls under your category. I don't think you're a corporation. If you aren't a corporation, please fill this out by January 10th. They will know whether they are a corporation or not, and then they can fill it out. But it's in their best interest for them to have it, because if they don't have that 1099, then they're going to be missing a chunk of income that they need to account for. So they will want to fill it out.
So I'm jumping up to get a couple of these questions. Okay, so I'll stick on this one for right now. If I have invoices that are paid on 12/31, is it important that I transfer those payments into my bank account that same day, or can I do it on a future day?
So that's where the tax planning comes in, because it's really going to depend on your individual situation, what everything looks like for you. I just know that a lot of businesses, because of COVID, are looking at that of taking the income in this calendar year versus next calendar year. In the end, it's not gonna make or break your year, because we've had such a tough year with COVID that it's unlikely that a couple of days will offset the rest of the year. It's more of that's by tax planning now, you'll know what to do for the next year. So take your deposits however you would normally take them. I wouldn't stress out about trying to get it in this year or that year at this point. But with planning, you'll know exactly what you should be doing for next year.
Cool.
And yes, Amazon is a corporation. Gotta love Amazon.
One of the questions came up, Tabitha was talking more about with the expenses and revenue. If in her experience, the expenses are more when I have more revenue. So would that make them flexible?
Yes. So because they're related, if you are incurring more expenses, then you need to really analyze those, because they might fit under COGS. Because if they're going up, the more your sales go up, they're likely related to, the creation of that product.
And then somebody said you didn't mention anything about sales tax charging and filing.
Ooh, yes.
That's a whole other ball of wax.
Yeah. Sales tax would take a whole hour and then some. So the challenging aspect of sales tax is that it is by county, and it varies by county, and you have to pay for it on various different schedules. What we always recommend is we offer services through TaxJar as like part of our our suite of services that we offer. And it is essentially a system that manages those individual filings and tracks when everything should be paid by the county, and all of the various things that you need to do, because they're all going to be on different schedules. That is truly the best way to do it, because as an entrepreneur, you would essentially be doing nothing but paying sales tax just every day. Every day you would be like, okay, I have to pay somebody sales tax today. So it's almost just not worth the time investment. So it's better to, that's one thing, just outsource it. Just get the system. You can contact us and we can send you the link. You don't have to have bookkeeping services to do it, but we do manage it if you do bookkeeping through us. So
let me just speak to the complexity a little bit so you know what you're getting into. Depending on what state you're in, they have different nexus, whether it's an origin or destination of the sale. And then from there, you report to the state, but you also have to account for county surcharges on that. And then also some localities also have additional ones that you have to account for and remit to the agencies. So it's complex and it's important. So it's definitely something that you need to track and manage.
For anybody who's new to being a balloon decorator but have been an entertainer in the past, it gets more confusing. And I know Linda was in this boat at one point, is because when people are pure entertainers, either face painters, twisters, jugglers, whatever, their stuff is typically looked at as a service and is non-taxable.
Mhm.
So now they just start doing balloon decor with the stuff they already had, and they don't realize, okay, it's no longer non-taxable and it does need to be taxed. And so that's one of the areas that sometimes becomes a gray area for people who are switching over from one part of the profession to another, is that there is that big difference that a lot of people aren't aware about. So
Yeah.
we always say you don't know what you don't know. And so that's one of those things that you want to get with your local city, county, and get your paperwork filled out with them and do it correctly, and then get
The
help when
other
needed.
thing is, if you're like, we are close to Georgia, so it's very plausible that somebody that lives in Gainesville would be making deliveries to Valdosta, which is only like an hour or so away. Well, then you just have a whole new set of things to deal with, because now you have all of the Georgia taxes to deal with, and any other counties that you might be. So it's one of those things where it pays to just have the system that is solely dedicated to paying sales tax. It's worth it.
So Wilhelmina has a great question. She's actually from the Netherlands, so it's like 3 a.m. there. So I'm always impressed when she's on our one of her questions was, she's a home-based business, and she is asking about with the percentages, how do you know? Because you don't know for sure how many items you're going to sell. So, how do you play that guessing game?
Yes. And really, it's just to estimate. A good rule of thumb is, I would average what you typically do in a month, and I would average that over the year, so that you won't have these huge kind of ups and downs. The goal is to look at your expenses and think about what you will likely sell, and try to get a per item cost on your overhead. Does that make sense?
So if that made sense, put yes. If not, let me know.
Basically, that formula is just trying to make sure that you're getting in the ballpark of what you need to be charging, and not like $5 when you should be charging $25. Because your materials may be like $2 and you think maybe $8, sure, I'm getting a markup on it. But if your overhead and all your wholesale prices at $20, you're losing money.
Exactly.
So I've got a question from Dory. She's an LLC. How should I be paying myself? I account for my labor and my pricing, but don't take a salary.
Yes, that's perfect. So You shouldn't be taking a salary as an LLC. You'll pay yourself as a owner or a member distribution. I don't know. Did she say single member? If you're single member, it'll just be owner distribution. And you literally can just transfer it out of the account. And then you code it as owner distribution in your chart of accounts. And I would recommend that you have a plan to how you want to pay yourself. And that you have gone through these exercises so you know exactly, you know that you're supposed to be making money on what you're selling. If you start taking money out without accounting for all of these other things, then you could put yourself in a hole.
Cool. All right. So, you know, people are just chatting that they've started paying themselves like $1,000 a week in some instances.
Yeah, that's a good, obviously it depends on what you're bringing in.
That's
Wait.
why your reports are important.
Yes, yes,
Tells you if you can afford to pay yourself.
which hopefully you can.
That's the goal.
So here's an interesting loophole. We'll see what you guys think. What if the customer doesn't keep the product? Wouldn't that still be considered a service as it's not a sale of goods? So an example of that would be, let's say you went and built a balloon arch for them. The balloon arch stays up for the 2-hour party and then you go and take it down. But I mean, it was built for that event. You're going to be popping the balloons. It's not, typically you're not going to be reselling that item.
Yeah, so because it's a tangible item that you are providing to them, that, like you said, can't be reused, it's considered a taxable item. I'm sure there are some gray areas with some specific products, but like that example would for sure be taxable.
And then
Yeah.
Martha did say that in Kentucky, they've changed it, that services are now taxed there also.
Oh yeah, that's the thing too, is that each state is going to be a little bit different.
Right. So, and that's the thing that I want to make sure that we go on tonight, is that you understand that this is not like, this is the only way to do things, but this is the basic guidelines. And I always encourage people for you to hire someone that either works online and can handle all areas, or that's specific to your space, that you get those questions answered, and that you work with somebody, because in a bookkeeping service like this, and when giving financial information, we're giving the broad spectrum, and there's always going to be special cases and things depending
Right.
on your situation. So I just wanted to throw that out there.
Yes, absolutely. And with people all over the country, once we have a client, we specialize in what their particular situation is, but it's impossible to give kind of broad strokes like Joette said. So absolutely, it's going to be different for every single person. If you're in a different county, sometimes it's different. So
just around us, we have a 1% tax in our county, and then there's a county like right next door that has like 2%, and I think there's some that don't levy any. I mean, it's all up to the localities, really.
Yeah.
Cool.
Okay.
All right. I think we're ready for the next one.
Yes. So I threw in a couple bonuses because this was just signed into law as of December 27th. And this is really applicable to you guys and really any entrepreneur. But I wanted to give you some of the highlights to look for. So the payroll protection program, this is super important. And if you didn't apply for a PPP loan before, you can actually apply now. Or if you already got a PPP loan, you can apply for a second draw. So if you've already used those funds, you can apply for a second round of funds. They've streamlined the forgiveness process under $150,000 and essentially guarantee that they will be forgiven as long as you fill out this one-page form. So that's really good news. The PPP loans have to be used on qualifying expenses. They have to be used on 60% payroll, which I know is difficult for folks that may not have specific payroll. But if you have an employees, you can definitely look at it, but they're going to want to look at your income statements at the end of the day. They're going to want to see, what you paid out, who you paid it to. They're going to want to see all of that. But they did expand the other things that can be covered. So it now can cover property damage, supplier costs. So if you use a supplier that is an essential supplier, it covers that. If you had to purchase a PPE for yourself or for your employees or for the business itself, it covers that. And there's also some operating expenses that can be covered in that other 40%. Also, now it has been written into the law that businesses will be able to deduct what was paid with PPP loan money. So it is not going to be taxable. Essentially, you will be able to use it, and they call it double dipping, but this is a huge win for small businesses. They're also going to reopen the EIDL grants, and these are $10,000 grants. So you don't even have to go through the forgiveness process. It's just a grant already. You don't have to pay it back. They did give some out in March, but the funds ran out quickly. So let's say you got $2,000 back then, you can actually apply for the remaining $8,000 and possibly get that. They're also have specific funds for live venues, concert halls, movie theaters. So they're really trying to help these live venues. So that may not necessarily apply to you guys, but that might apply with a lot of the people that you work with. So it's also a really good idea to, if you know of anyone that really needs this, tell them to apply early because the funds will run out. So it's one of those things where we just want to share the wealth of information, even if you think somebody that's in the entertainment business could really use the help.
So a quick question that's come up on that was, do they go to their bank to apply for that, or how do they find out?
Yes. So the SBA will open applications soon. They are not open yet. You will want to be early on in the process. If you already went through a bank and to receive a PPP loan before, you can go through that same bank again, or you can go through a different bank, or you can go directly through the SBA. There's kind of a multitude of ways to do it. But the key is like really being ready to go. The other thing too is the EIDL grants before were being taken out of PPP loan forgiveness. So if you got $10,000 in this grant and you also got a PPP loan, they would take the $10,000 out of what you owed, and you had to pay that $10,000 back, and they considered it an advance. This really hurt a lot of people in terms of they didn't realize they were going to have this huge bill at the end. So that is no longer. Now you can have the grant and the PPP, and they're separate from each other, and it doesn't reduce your loan amount or the forgiveness portion.
So one thing that I knew from the first round, and of course it's not written in stone, but it seems to me the people that got their PPP and had it quickly were the people who went through banks. The people who try to just go online and wait it out, that did not seem to work. So if you've got an in with a bank, or you know somebody locally where you live that had a good bank that they went through, I think that's a super important part of the process.
Yeah, that's a great point.
So we've got several questions that are popped up on here about this.
Okay, I didn't apply. So the great thing about the second round of PPP loans is that you can use any quarter and compare 2020 to 2019. So you can use any quarter that is most advantageous.
So take the lowest quarter to use.
Mm-hmm.
Gotcha. And so we're not sure when they're going to have it open for people to apply. need to just
Right.
talk
So
to
they
you
haven't released that, but it will surely be probably in the coming days.
Okay. Are there rules for what the EIDL grants can be used for? Tabitha is moving and will be working on turning a huge shop into her new workspace.
Nice. As far as I've read, I haven't seen any specific rules because it's really just a grant. But yeah, we will see. Yeah, I mean, obviously it shouldn't be personal expenses, but as long as it's a business expense. Does the 1099 count towards the 60%? If they are employees that are 1099, then yes. If they're vendors that are 1099, then no.
So paying a 1099 employee salary does count towards the 60%.
Mhm.
Okay. Cool. You made some people happy.
Great.
So wonderful bonus information.
Yes.
So yay.
And we'll close with, like, we know this is a ton, but it really is more about progress and not perfection, and just start small and start chipping away at some of these things. And if you need help, then reach out and let us know. And, we're happy to help you.
Yay.
And thank you guys for sticking around. I
Yeah.
know we went a little bit over.
We appreciate it.
Yeah, well, and it was because we had so many questions is why it took time. So we greatly appreciate you giving us this information. Earlier in the chat, we've put in a couple of links that you can go into to be able to get the form that they showed you. So please use that. And then with that link that you gave us tonight, did that give us a way that we give you the email, or do we need to come on to your website to do that?
Yes, so it'll pop you onto our website. You just put your name and email, and then it'll automatically give you the link to the form.
All right, so
Oh, go ahead.
I put that up there and again there for you guys. Oh, Tabitha did have a question earlier that I had missed. What does planning for depreciation look like? Are you able to give us just a quick
Yeah, it really just means if you have a big expense coming up, that you can make the purchase at an advantageous time to start that depreciation clock. And obviously you want to depreciate, in some cases you have to depreciate. But there are some things that might be in the gray area. So talking about it with your bookkeeper beforehand and seeing, okay, when should I make this big purchase is really helpful. And the specific time will depend on your individual business.
Awesome. So I'm super excited that Joe and Elizabeth are now going to be mentors for us in our Balloon Boss Mastermind program. And that doesn't mean that you get free tax advice 24/7. What that means is as they see conversations come up and they've got resources for us, whether it's a blog or, maybe information even from this, that they'll put that out there for us. And then I want to make sure you guys just understand that if you don't have someone that you're currently working with for bookkeeping and you've been looking for somebody and trying to search, hey, who's an online person that can help me out? And if you've been looking for QuickBooks Online, I'd encourage you to get that through them because they get a discounted rate on the QuickBooks Online. And then if you want to use their services, they do have services where you can have them set things up for you. Or if you've already got things, but you need somebody to look at it because you don't have things broken out like you should, they can do that for you. And then you also said that you do consultation throughout the year. Sometimes like when you just get to that breaking point that you're really crunching your numbers and you're realizing you don't have things set up the way you want to, they do have that consultation services available where you can just book time to talk with them and pay for that service specifically. The other thing for those of you who are larger, they do things with payroll also. So this is something that people ask me for all the time. And one of the companies who's helped us out with webinars, I think almost 5 years ago, the way their business has grown, they're not available to help out right now. So I wanted to make sure that we gave you guys a service that, knows somebody in the industry and that, is helpful and generous with their information. So I greatly appreciate them being with us tonight. So what I'm going to do real quick is let you guys put your thank yous there for them. The other thing is Joe and Elizabeth are hanging out in my mastermind groups. I mean, not my mastermind group, in mastermind, but they're also in my other Facebook groups. So if you guys liked tonight's webinar and it was helpful for you, go to Balloon Coach Community or Balloon Business Startup and be like, oh my gosh, Joette, thank you for having Joe and Elizabeth on tonight with their financial webinar. It was awesome. You know, just put that out there so people are like, oh, I maybe need to go check out what's going on over there. And then are you guys seeing my website currently?
Yes.
I just wanted to make sure you guys knew that with BalloonCoach.com, we've been doing some updates, and you can go on right now to sign up for Summit. And if you're needing that end of year expense, you can go ahead and buy it. Now,
Yes.
all 18 instructors are on there. Mastermind is my monthly program for just $97, where you get to hang out with them more. Then my Balloon Boss Pro course is a self-study online, and then our downloadables are there with different things. So you can check that out. But for those of you who are in Mastermind, you're always asking me where to find things. And sometimes people forget to go check them out. So what's great is now with the finance tips that Joe and Elizabeth are going to be giving us, we actually are going to have an area where we're going to keep that for you guys so that you'll be able to easily find it. So the information from tonight will go up here into the financial tips area. It's also going out there into our Facebook pages, but you know, that disappears after a while that you can't find things anymore. So I wanted to let our mastermind members know that you're going to be able to find that and other tips from them in the future here, along with our tech tips from Brandon, our new marketing plan that we're going to be showing you guys the calendar on the 4th of January, our decor 101, our editable templates, our getting started in mastermind information, plus all of our webinar replays from the first Monday, third Thursday, and fourth Tuesday are all here in our calendar now to show you when the next webinar is. So I wanted to make sure that our Balloon Boss Mastermind members knew where everything was and where they can find this information if they came in partway through tonight's webinar. So Joe and Elizabeth, thank you so much for your time. We greatly appreciate you being with us tonight and answering so many great questions. And I look forward to us hanging out with you through 21 to make this an awesome year. People taking that one step forward at a time to get to understand their numbers better.
Yeah. Thank you so much for having us. We enjoyed it, and the questions were great. Yeah, it was a pleasure.
Wonderful.
And I look forward to seeing you guys.
All right. And if you guys are needing to jump off, you can do that. I'm just going to chat with some folks. I always like to give a little extra time at the end of webinars for people who are on live to answer other questions for them that are off topic. So in just a second, I'll stop the recording and answer those questions. But if you guys need to jump off, feel free to do that. So thank you so much. And just a reminder, guys, if you need other services and want to see what else is out there, go to BalloonCoach.com and you can check out Summit, Mastermind, and our other online programs. I look forward to helping you take the next step in growing your thriving balloon business in 2021.